certain relationships, okay, and then you can find sets that don't fit the mainstream, so to speak. Okay, so one of our students, Sutapar, is applying this to a large data set from a big company, which I think we can name, like you said. Oh, you can't, okay, because you can name it yesterday, but not today, all right? It is continuous variation, all right? So this insurance company has some concerns in its group-like processes, but this is just an application. I mean, the point is we got the data, we want to see whether cluster analysis can provide some insights into this. So you can see there's a lot of data that is being processed, okay? And what cluster analysis does, now this is just one example of cluster analysis, okay, where you take some of the attributes of the data. In other words, the data has various columns, right? And you pick some of the columns, okay, and you pick some algorithm that measures the similarity of this data to each other, okay, to try and group the data and to see if there's patterns within it. Okay, now it's very important to understand there's a lot of subjectivity here. All right, the choice of these attributes, okay, there's more attributes than this in the data set, right? So which ones do you pick? Okay, I don't know, right? To be honest with you, I mean, it's a question I ask the students. Okay, how do you pick it? And I haven't got an adequate answer, and I'm going to expect one before I sign them off. Okay, because I want to know. I mean, we can't apply this, right? Unless there is some systematic procedure involved. Okay, it can't be just some random thing, right? We have to know, right? Is there some way of picking the attributes that work best? Okay, does that require some, obviously I think it requires some industry knowledge about which attributes to the data are the ones that are really key, but the ones that whose relationships we want to map. Okay, but in any case, here is just a choice of these. Okay, there's also many different algorithms that can be used. All right, we need to try and figure out which ones are best. Okay, the point is that by looking at this data, you can see here using those attributes and that algorithm, you've got 12 different clusters. All right, which with varying amounts of data in them, which can also be seen graphically. Okay, what that represents. Okay, so here's the data. Now understand carefully, obviously, that this is a multi-attribute problem, right? So you can only see two of the attributes here. Okay, I'm not that visual a person. I'm not sure what is gained from looking at it this way, but I know a lot of people find this kind of visual representation very interesting, especially with all the nice colors. Okay, but the point is to show, all right, that there is these different types of clusters, okay, and some of these could be considered as outliers, all right. Now, of course, this is simply a grouping of data. Okay, what's really important to know is whether some of these clusters that are considered as outlier clusters are in fact indicative of fraud or misrepresentation or all the other things that are mentioned in SAS 56. Okay, and the only way to know that, obviously, is to go and investigate it. All right? Okay, so again, this is a pervasive problem in auditing. Rod was talking about, you end up with 40,000 exceptions, okay, and you say, well, you just say, I'm not going to do anything with them, right? I mean, Patrick made the same point in his presentation. Now, of course, for all you know, all 40,000 are relevant, right? Okay, but the fact of the matter is, realistically, we've got to reduce it to a set that, based upon some systematic procedure, we think is more relevant, is more important to look at. You can prioritize in some fashion. Cluster analysis is a means of doing that, but we then have to go in and investigate to see whether it actually has picked up something relevant. Okay? Now there's two options there. One is to seed the data with artificial errors of some sort to see whether the system can detect it. That's the method that Alex used, for example, with the continuity equations approach. Right? I'm not quite sure whether we can do that with cluster analysis. That's a question a mathematics person has to really answer. But I think the best method, obviously, is to go to a client and say, look, we will find a cluster that's an outlier. You go and look at it and tell us whether we actually have picked something up. Okay? And that's where I think I'm basically asking for is an industry partner who's willing to try out something which I think is a very innovative approach. It's widely used in things like marketing. But there it's different. There we know that there are different types of, for example, niches of customers, okay, that you can look for. Okay, so the application to auditing is still at its infancy, but I think it's a very important technique, and hopefully we will find a partner that will work interactively with us, so we can fine-tune the clustering methodology, so to be able to hone in on those on those particular patterns that are in fact indicative of fraud or whatever. Okay? All right. Before I move on, any questions on the cluster analysis part?
How important is the aggregation level of the data when you're doing these?
Oh, very, right. I mean, again, that's the point, right? A lot of these, when you talk about something like cluster analysis, it sounds like, oh, this is a mathematical approach, it's easy to apply, but it's not, right? There's a lot of subjectivity, and so that's why there's a lot of research that needs to be done on how to best use a technique like that. And also, of course, ultimately, as Patrick said, it has to be a black box, right? I mean, we can't have auditors sitting around thinking about K clusters and this and that, right? I mean, it has to be something that comes out, it's easy in plain English like he said, and say, look, here is a set of data that shows us relationships amongst 6, 7 attributes that are a little bit odd, right? You have 30 observations that group themselves into a cluster which seem different from the other 100,000, right? So go and see what's happening there. It may be perfectly normal, but it's not. But clearly again, this has to be emphasized, though this may seem very mathematical, there's a lot of auditor-driven subjectivity in its application. Okay, Mark?
This is very computer intensive. What software package are you using over there?
Niklas will know the answer to that.
We are using WCARS. Actually, SAS also has a feature. Is CD or Supermarket?
He must be out the room.
We found that SAS was very demanding. So we like to have it in free software, so other people can use it. I wish I had a microphone. But just to say one thing, we're extremely excited about the clustering stuff. We have actually asked Trevor, I don't know if Trevor is here, we asked Trevor to help us to develop this into a kind of formalized practical audit procedure like a CPA firm could use it. We actually would like to get one of our business partners to participate. We actually have 2 business partners participating with their data on our clustering work. 2 of our dissertations, Sivipans and Sutapat, is doing clustering in the dissertation, but we are now trying to create it as a practical audit procedure. And as Michael says, we think that we need to do something that is really step by step, very simple. And I don't even like the word black box because the implementation operation research literature say if you don't understand technique, you don't want to use it very much. So we want to make it black boxish, but easy to understand what you're trying to do. So people know, I don't know the details, I don't know distances between clusters and etc., but I know how to, what it's trying to do. But we are very, very excited about this. The technology, and this really came out of Sutapal's dissertation to begin with.
Okay, let me quickly move on. We only have a few minutes left. To our next innovation, right? This is process mining of event logs. Now, process mining is an extremely hot area in computer science. In the last 10 years, hundreds of papers have been written in computer science on this topic. Okay, many of the big firms, IBM and Big Four and so on, are heavily investing in process mining. Okay, what is a process mining? Here's the definition by the Process Mining Center. Okay, the idea is that there are these event logs. These are data files stored in a large computer system like SAP. I mean, process mining applies to companies, big companies with SAP systems, right, or ERP systems. Okay, and they maintain a lot of data. Process mining is the statistical analysis of this data. Okay, but what's so special about that? Let's talk about that. Okay, this process mining, this event logs is the raw material of process mining. Okay, and they're also called audit trails, all right, by computer scientists, though in fact no auditors have ever looked at them, all right. but it's a chronological record of computer system activities. Basically what it means is, look, if you're somebody entering data into a general ledger by paper, right, only you know, right, that you went there, you wrote the thing with a quill pen or whatever it was, and and you took responsibility for that. But in today's ERP systems, of course, when someone enters data, the system itself is recording all kinds of information about it, like timestamping when you did it, making a record of your ID, login, and things like that. Okay, if you made any changes, it can record that. Obviously the amount of details it can record is a function of the capability of the system and which of those features you turned on. So for example, in theory, in the limit, you could imagine that the system could record every keystroke. All right? That technology, that software is easily available. For obvious reasons, people haven't turned it on or haven't accessed it. But in theory, it could. And that's just an indication of the kind of metadata that an ERP system can record. All right? And why is that important? Because that information is recorded independent of the person entering the data. And you can, and as soon as you say that, you can see the potential this has for auditing. All right? Meaning that the auditor is no longer constrained to only look at the data that the auditee chooses to enter. Now there's also independent data that the system has recorded about the auditee, right? Like who it is, when they put it in, and so on. All right, and what we think is that this data could potentially be of extreme value to auditors, especially because the computer scientists have come up with all manner of techniques for analyzing this data. Right? There's many different perspectives focusing on who is doing it or what they're doing or the nature of the transaction. Okay? There is examination of, for example, the social relationships amongst the people doing the analysis, doing the entering. All right? It's called the social cluster analysis, which looks at, okay, I'm going to look at a particular transaction and say who did it. Then I'm going to go and see, okay, were there other, who else did I do similar transactions with? Okay, are there matches between me and vendors, for instance, and so on? You can see the potential of this, right? I mean, this is obviously an open research question, but I can imagine that this is an opportunity to actually start looking at what Rod this morning said was the most difficult thing, collusive fraud, right? Because now we have some handle at least, independent of the auditee, of who these people are, who else they associate with, what kind of similar transactions they do, and so on. Obviously, it has to be entered within the system. You can only look at the data that's already entered, but nonetheless, all right, this has a lot of potential. Basically, what the process mining does is enables you to compare how a process is run versus how you think it should be run, okay, or how you think it is supposed to be. Okay, so you can do that kind of comparison and see how the things actually operate. Okay, so let me give an example of how process mining can be used. This is an example of one of our clients who spoke to us. All right, and that person was telling us how they had a whole set of segregation of duty controls. All kinds of people who double checked each other and so on. Okay, and then they said, well, we had a round of layoffs. All right, a lot of people got laid off, including those people who are in this chain of control. And obviously, people found workarounds, right? Because the people they were supposed to authorize are no longer there. Okay? So, but now, what's actually happening there? Who is doing what, right? Because our beautifully constructed set of controls has gone out of the window. Okay? But what process mining can do is actually go and investigate and see, okay, what does this process actually look like now? Okay? Who is doing what? Who is associating with whom? Are there control weaknesses in this, and so on? That's just one example of what the process mining can do. And again, the point is that the event log is such a rich source of data. Now, it's important to understand that event logs don't exist. Okay, meaning that it's not like you can just go pull up a tape and here's an event log. Okay, an event log is something that has to be constructed. Okay, an auditor or somebody has to go into all these elaborate tables that Patrick was saying, makes ERP or whatever very, very difficult, and extract from it what you think are the relevant data that should go into an event log. But let me just finish by giving an example of that. Okay, here's just a made-up example. All right, so on the left-hand side is the invoice, meaning this is the actual data that the auditor would see, right? And it shows that there was an invoice to AT&T of $120 signed by John and Pete, okay, on February 10th. Okay, now, that's the input date. On the right-hand side is the event log. The top is the input data, but what the metadata is showing was that this was actually done on February 12th. All right, not February 10th as it's mentioned up there. The actual timestamp on the transaction was February 12th. It was done by somebody called Mike, and it was for $100. Okay, and then later on that day, okay, 20 minutes later, John came on board, changed it from 100 to 120, okay, and authorized it. Okay, so now this information is stored automatically by the system It's not what you see, though, if you just looked at the transaction that's on the ledger. Okay? Now, again, it's easy to read here because somebody went out there and constructed this event log, pulled out the data that's in all these tables, and put it in a form that's easy for us to read and say, okay, something odd happened here, right? Okay, in real life, this is buried amongst billions of transactions, so that's why you need this powerful statistical techniques of process mining to, first of all, create the event log and then go and analyze it to try and pick up anomalies like this, all right, which are violations of control. Whatever, I mean, there may be something here, there may not be, all right? So again, what we're trying to do here is work on doing process mining, bringing it to auditing, okay, which hasn't really been done up to now. Okay, I forgot to put the name of our lead investigator on the front. That's Meiki Jans, all right, who got her PhD in Belgium about a year or two ago, right? She's the one who her dissertation was on process mining and auditing with Miklos as one of her advisors, and she's now working at Ernst & Young because Ernst & Young is very interested in doing process mining and taking it into the audit field, and we are also trying to do that. And again, as before, what we are trying to do is find an audit client, a client, right? Someone who we can work with, who will give us access to their SAP data so that we can construct event logs and apply the many different algorithms in process mining. We don't need to reinvent the wheel. About 10 different types of statistical analysis have been developed by computer scientists. More are being developed. Software is being developed by these big vendors and so on to do process mining because they can see the exciting applications. But we would like to work with the client to bring that to auditing. Okay. Anyway, we are running out of time, so I'll just stop there and ask if